Hey there, it's Eileen Gilbo with the Real Las Vegas at Urban Nest Realty, and I have Aundrea beach-Greco here with me with CMG Financial. And we just thought that we would kind of discuss questions that we're being asked by our clients. So I do real estate. So I'm asked all the time questions about mortgage, and you do loans. So I'm sure you're asked all the time questions about real estate. So we're just going to kind of figure out what is happening here locally to the best of our ability and fill you in. So, hey.
Hey, thanks for having me.
Yeah, we tried to do this live. Didn't work.
Okay. So yeah, on a daily basis, we get asked questions about, and not everyone's real estate focused, but if they are, they're asking about the market and what's happening and with mortgages. So we both thought it would be awesome to come on and collaborate so we can share what's happening in market and what's happening in mortgage and kind of share that with you guys. So.
All right, you want to go first?
Sure. So I have some questions, and I kind of just got a few of the top ones that people are asking me, because do you have a pulse on the market and what's going on? So people are just asking, well, what is going on in the market today?
Well, I mean, right now our numbers for March, which is we're usually a month behind. So our numbers for March are strong, but this all started kind of mid-March. So they're not actually going to be reflective of what's going to happen from here on out. I know that the governor put out kind of a notification to real estate agents and said, you cannot show properties that are tenant occupied because it's intruding on their space. But you can show property that is owner occupied. So that is still good. If it's vacant or owner occupied, it can still be shown. But we won't know those true numbers until probably a couple of months down the road. I'm seeing a lot less requests for showings. And everybody that I've talked to, it's kind of the same thing. They've slowed down a little bit, but people still are listing their homes. People still are buying homes. So we have not closed up shop. We're still operating just at a much, not much reduced, but at a reduced rate.
Yeah. And at least as far as activity goes, I know that I've been hearing there's still buyers and still sellers because people still need to buy and some people still need to sell. So I've heard that, which is excellent for those that are in those markets.
Yeah. So, well, and the good news about there still being inventory is that usually this is a very busy time for us. We get into our spring season and it's very busy. So right now, if you are a buyer and you normally would have had maybe like a multiple offer situation, you're not really going to have that as much. Not that you won't have it at all, but not as much because there's not as many people that are purchasing right now.
Right. And then the next question I have people asking is...
I have one for you.
Yes.
Okay. Well, we'll take turns.
Okay. Sounds good.
So I have had a lot of people, clients that I have that have stated, hey, listen, I'm collecting unemployment. I, lost my job during this time. I was in the market to buy a home. Now, after the quarantine's lifted, how long do I have to wait before I can actually purchase?
And that's an awesome question because unless they're on unemployment or furloughed for over 6 months, there is no waiting period. So the key will be for them to be back to work and be able to supply a pay stub for the last 2 weeks or to 30 days or roughly, because I don't think someone would go back to work and then the next day go home shopping just in this environment. So
It's true. Yeah, I think they're going to have some other priorities.
yeah. So again, to answer that question though, there isn't a wait period. There isn't a time frame unless they're on unemployment for 6 months. Then guidelines for different programs change. So good news is that once they're back to work, they can start back up, start the process, get reapproved if they weren't already, and just start the process all over.
Okay, well, that's good to know, because I've had a lot of worried clients, who were thinking that it was going to take them forever to be able to get back into that mindset of purchasing. So that's good.
Yeah. And I'm sure we'll talk about it, but the concern is, and if you want to talk about it now, we can, is the clients that are currently in a mortgage and own a home with a mortgage who are unemployed and seeking forbearance. Those who want to sell and buy another property. That has been a challenge. And I don't think it's on my question list, but the concern is this, just so we can go over it, is that obviously with a lot of people unemployed, they're not able to make their payments, and priorities are to feed your family and basic needs. So
right.
The people that are in a home seeking forbearance, obviously there's different variations of that. The consequences though at the moment is, if someone takes advantage of doing a forbearance because they have to, they're unemployed, I mean, again, it's a solution for now. At the moment, the guidelines state that if they want to refinance or purchase, they have to wait 12 months. Let's rephrase that. If they're trying to buy up, if they're trying to refinance, not a brand new buyer without a mortgage, obviously, they have to wait 12 months of timely payments before the lender will allow them to move forward.
So is that 12 months? Because can you actually go a little bit more into what forbearance actually is?
Sure. So forbearance is when you have a mortgage and you're unable to make the payment. It's a relief program that the servicers have implemented so that it gives you a break. Now, when I say that, every servicer, whoever you make your mortgage payment to, has different rules. So whether you make your payment to SPH, Wells Fargo, Chase, whoever that is, they all have different requirements. But the forbearance is to be able to allow you in times of crisis, unemployment, natural disaster, to be able to have a break in your payment. Now, there's variations of it. Most of the programs I've seen clients today get approved for are allowing you to skip 3 months of payments, and then in the 4th month, they either are collecting all of the mortgage payments or they're reevaluating it. But it's so new that may change, and we'll see what happens. But the forbearance is meant to help. We'll call it like a Band-Aid, but to help give you payment relief.
Okay, so I know that some of these, like I'll just give you an example. My daughter, if she decided to do forbearance, she had until October to catch up on all those payments, be current before kind of any other action was taken. Mm-hmm. So now if it took her until October to catch up, is it a year from that date, or is it a year from the end of the 90 days forbearance?
It is the end of when she has to be caught up, and then payment. Let's just say she gets caught up in October, using this example, and her first payment starts November. Then we're looking at 12 months starting November.
Okay, so that could be up to 18 months.
Correct. And that's what I've been telling people is, unfortunately, when this plan was announced with the media, I honestly think it was released incorrectly, but they said, hey, everybody go apply for forbearance. Well, first of all, the plans weren't put in place. The call centers, a lot of them are out of the country and they're not educated on the pros and cons. And people just started calling or skipping payments without inquiring. And so I think, they're still getting through that, and it will have some ramifications. But yes, it could be up to 18 months if someone was in a home thinking, oh, I was planning on selling and buying up because the rates are great, market's great, and now they're going to have to wait.
Right. Yeah, because I mean, 18 months is a long time to do that, when, I mean, and I had even, again, like for this example, I had, suggested to my daughter, well, you almost have better luck, with maybe talking to the people who have your car loan or to your credit card companies,
Yeah.
and still maintaining that mortgage payment. Because that's hard. I mean, when you're given X amount of, months to catch up, you weren't making more money during that time. So now where is that supposed to come from? And I think that's what has, quite a few people frustrated with the process.
Yeah, I have only heard of one servicer allowing an option where the money that's being forbeared can be put at the back of the loan or be caught up at the end of the 90 days. There's only one person that was given that opportunity, and I would hope the others follow suit, because I think it's unrealistic. Someone unemployed or on lack of income, or income cut down, whatever that looks like, to not be able to make their payment today and then in 4 months go, well, now all of it's due, or you need to pay a payment and a half. Well, that breaks the budget for most. So, but those are some things that, again, to point out with a forbearance, absolutely take advantage of it if you have to. But if you don't have to, then you're at least better prepared for the future in case you want to do something with your mortgage. Because like I had told the client, and she's the one that got the option with it being put at the back, I told her, I said, well, if you want to tap into your equity and do something else, you can't for 18 months. Yeah. So how would you it's not like now you're hostage. You can't do anything.
Right. Well, and honestly, I mean, I wish that more people would contact, their professionals before they just call these call centers, because they're not educated in this whole process. They were given guidelines that if they call, this is what you give them. So I mean, actual questions of like what we're discussing, they're not really getting that information. So you're not able to make an educated decision, and unfortunately right now, a lot of these decisions are made out of necessity or fear. And, we really need to kind of get the message out there that, listen, I'm here. I can answer questions for you, because it's confusing for sure.
Yeah. Yeah. And I think people need to also be mindful that if they need the help or they're calling, I've heard that the servicers are automatically putting them on a forbearance plan and mailing out the paperwork. I'm like, well, wait a second. If I'm just inquiring, I didn't initiate it. And if I've initiated it, now you have to be careful, because if that gets reported that way on your credit report and you really didn't want it, now you're in a problem situation for your future if you wanted to do something. So
Well, so since we're on the subject of kind of the refinancing as well, I've also had clients asking me that are saying, listen, we heard that the Fed dropped the rate, so we're going to refinance. And then when they're calling to get, a refinance, the rate is actually higher than the rate they already have. That's creating a lot of confusion as well. So can you explain to me what that means, why the refinance rate didn't drop when the Fed dropped the rate?
Sure, of course. So first and foremost, I think, again, the media and the government has done a poor job of educating the consumer. And what happens is that on an overview picture, when they say, oh, the Fed dropped rates, most consumers think that that's a relation to mortgage interest rates, and it's not. The Fed, when they talk about rates, that has to do with short-term financing, prime rate, car loans, student loans, loans like that. And to simplify it, it is the rate that the banks lend to each other. So if you're a bank and I'm a bank, we're lending to each other. We get to lend today at 0%. Now, obviously, if a bank lends to a consumer at 0%, they're not going to make any money. And banks
right.
Right?
I mean, they're in the business to make money.
Right. So first and foremost, there's that misconception. So, when the Fed said, oh, we're dropping the rates to 0, I think like ants in an anthill, everybody came out and said, oh my gosh, I want 0%.
Right.
Well, so do I, but unfortunately, there was a misconception. So going back, that's why point one, why rates are not the place they need to be. Point two that people need to understand is that when that happened, the number of applications for banks, lenders, brokers, credit unions went up 200%.
Right.
So that means like you're standing in line for toilet paper and there is none.
Yeah.
Everybody wants it and then you can't get to it.
Yeah, for sure.
So with that said, it's called capacity. So what's happened is that there's a lot of lenders that have decided, what can we do to curb capacity and to slow down the influx of this business? And that's by artificially inflating the interest rates. So there's that. Then we have the Fed that decided, after announcing their interest rates are at 0, that they decided they wanted to buy billions of dollars of mortgage-backed securities because the stock market tanked 20%.
Right.
Now, I'm not going to go into too much detail, but because of some of those things, that has made the liquidity too much in the mortgage market, and investors have decided to pull back and put their money somewhere else. So there's another layer of that which has affected mortgage interest rates. And now we're in today's market where the forbearances, because of coronavirus, are starting to happen because we're in the middle of April.
Right.
A slew of people haven't made their April payment, and it's just the start. So now when you think of those layers, those affect current market interest rates. So when people go, well, gosh, I thought the rates are low. Well, they are low, but you have all of these side factors at the moment. And unfortunately, what we're telling people is you have to wait. It will calm down. We just got to get through some of the capacity. We got to get through these bumps in the road. Coronavirus needs to taper, and we'll be back to, historic low rates for people. So that hopefully answered that question.
Yeah, it did for me. And I know that I'm going to link all, your information, my information on this video, so that if there is another question, that it can, be answered to the satisfaction of, people that still have those questions.
Yeah.
So
and
do
I can
you have
tell you
another one for me?
I do. Just to answer real quickly, just to reassure people that are wanting to refinance, depending on what they're trying to do, because a home loan's unique, just like you and I. Just because your neighbor got something outrageous doesn't mean that applies to you, but just know that if you hang tight, the rates that you were seeking are there, unless you're trying to pull out all of the cash out of your home and you don't have really high credit. But, this will all stabilize and this too shall pass. So.
Yeah, for
sure. So with that said, with interest rates, the questions that people are asking me all the time is it a good time to buy?
I mean, I'm not trying to sound salesy, but it's always a good time to buy if the necessity is there. So there are a lot of people who are looking to start building wealth for their family. You cannot do that renting a home. You have to have skin in the game. So buying right now is a great time. Like I had stated before, the market has slowed down a little bit where you're not, overrun with people putting in multiple offers on properties. So you're still getting, like you had just said, you're still getting a great interest rate. Which, I mean, they're still historically lower than they ever have been since I have been alive. So even though they might be a little bit higher than they were, they're still historically low in my opinion. So it's still a great time, in my opinion, for people to purchase.
And do you find that, again, buyers that are buying, we're going to say virtually, are having challenges, or is it just a new way to shop for a property?
Well, so it's really strange. So I've been doing virtual tours for military clients for a couple of years now. And because most of the time they don't see the property until they get here, and they need that property closed before they get here so
Mhm.
that when they move here with their families, they have somewhere to go. So I've been doing it for a couple of years. It may become more normalized now, and I think you're going to see that it's a huge transition for some agents who, just like me, I tried to get this live on, YouTube this morning and couldn't figure it out. So it
Mhm.
is kind of a whole new world in some aspects, but it can definitely be done. And we're kind of putting protective measures in there for my sellers who still are having people come through their home.
Mhm.
So I have my sellers turn on all the lights. I have them open all the doors. I have them turn on ceiling fans. I mean, whatever in that property needs to be shown, if possible, now that we're all, home, I have them leave the back door open so people can walk in and out. And then that way, the only thing actually in your home being touched is the lockbox by the agent to open
Mhm.
that property and the front door by the agent to open that property. So if you kind of go through this process, it makes it very easy for the buyer, and it
Mhm.
makes it extremely safe, as safe, I guess, as we can be showing
Mhm.
homes
Right.
for the seller. And then we just have them wipe, down the doorknobs and the lockbox with the Clorox wipe or Lysol spray, if you can find it, after the fact. And, those are kind of some of the safety procedures that we've put into play.
Awesome. And then I have one other thing that people keep asking is, with the economy and the proposed, we're in it depends on who you talk to, in the recession, and how coronavirus is affecting stay-at-home measures. What do you think, or where do you see values going in the future here in Las Vegas?
Well, we had, like I said, March was a great month. We reached our highest average sale price of 319,000. We have steadily been going up for several years now, which is, amazing. It's kind of leveled off to where I know a couple years back we were getting 10% per month increases in property values. It's tapered off. So we are still seeing increases, but those actual numbers of how this kind of affected us, we won't really have for a couple of months.
Yeah.
But values, I don't see the listings coming out that I see are priced correctly. I
Mhm.
know that sometimes we get into this spring market where we're thinking, oh, we're going to have multiple offers. It's going to sell within 5 days. People will inflate the price, hoping to get a better price for their home. I think that we're going to kind of see that, not because prices are dropping, but because people are adjusting. They're
Mhm.
adjusting that price point and being realistic about what that home is going to sell for. So I think as long as we maintain kind of um, our actual price and don't elevate it to try to get more than
Mhm.
what the property is actually worth, I think we'll be good.
Yeah. Yeah, I noticed that it feels like if you strip away what time of year it is, it feels kind of like well, depends. Some holidays are busy and some aren't.
Yeah,
But it kind of feels like that slowdown where we have that peak and it kind of slows
it,
down.
it kind of it kind of feels like August, September. it's 110 outside, the kids are going back to school,
Right.
and nobody wants to get out of their
Out of the
car to go actually look at a property. That's what
Right.
it kind of feels like to me.
Yeah.
But I still have people calling on my listings. I
Yeah.
still have, people that are, clients of mine that either this has hit their business and they're thinking of downsizing
Mm.
so that they can keep their business afloat. I also have people who live in high rises who are considering, oh, you know what, all of a sudden now this feels very close quarters to
Right.
me. I don't want to be touching an elevator button that 300 other people have touched that day.
Mhm. Yeah.
I don't want to be this close to people at this point in time. I'm getting older. I need to make sure that I'm protected. So
Mhm.
I kind of have a big span of reactions from my own clients to what's going on right now.
Yeah, we've seen the same. Again, we have a
Yeah.
variety of people that are still refinancing because it makes sense, and we have some that are, of course, the fence sitters that think the rates are going to drop even further. So we'll see how that goes for them. And then,
Yeah.
um, of course, we're busy with buyers. I think people are at home; they have a little more time on their hands, and with the proper mindset, if they were looking to buy, they now have time to sit down and look online at your properties, go in your portal and see what's available, and then get their financing in order and figure this all out instead of trying
Yeah.
to do it in 2 hours, where normally they're like, okay, I found a home, I need to get pre-approved, can you do it today?
Right. Well, and the other thing that I find as well is that, you could take buyers to, 8 or 10 homes in a day.
Mm.
So now they are really, and we're kind of having a little discovery session to where we're writing down, listen, what is your main goal in purchasing this home?
Okay.
So, and we kind of list them, and
Right.
they start to go through that process a little more in depth than they maybe normally would have. They'd walk through a bunch of properties and then say, oh, well, this doesn't fit for this reason. This doesn't fit for this reason.
Mhm.
So I have had clients that are doing like, they'll actually drive through the neighborhood first, which and I'm finding all these things that, man, I should have done this before. It would have saved all of us a lot of time. Drive through the neighborhood, see if you actually like that neighborhood. And then I'm actually doing like virtual tours of, they're like, no, this one I really want to see. So I will walk through that property with them on the phone.
Mm.
They can see it. Then they can say, okay, yes, this one I need to see in person.
Nice.
Or, oh, you know what? I didn't realize that all the bedrooms were on one side of the house. I wanted mine, separate. Or, oh, I didn't realize that it doesn't feel as big as it did in the pictures. And sometimes walking through it, you can kind of feel that out. So that is what I've also been doing, is doing the tours myself with them on, FaceTime, or I've actually put some of them on Zoom.
Yeah.
And then, they can decide from there whether or not it's something that they actually want to walk through the space. The other thing that's a little bit difficult is, because I have 5 kids, so I know if I'm going to buy a house, my children want to be able to see it. But I really am encouraging people to leave their children at home, because it's just, it's not worth somebody getting, sick.
Sick.
If anybody's going to get sick, we don't want it to be kids, so we've been, just saying, if at all possible, please leave the little ones at home, because then that does keep down on everybody touching,
Yes.
every.
Yeah. Yeah. Well, that's awesome.
Yeah. So I have another question for you.
Okay.
So I have had people ask me if collecting unemployment affects your credit score?
So the big helicopter view is no, because what you make and your credit is not related in the way that, again, if you stop paying your bills, then your credit score will be affected. And of course, it is a downhill slide once you start making less, and unemployment doesn't cut the mustard.
Right.
But an overview is no, it doesn't affect your credit. Now, if you stop paying your bills and you get into financial difficulty because of this, then yes, you're going to have challenges and obstacles by not paying your bills.
So all by itself, no. But when you add it all together with some of these other extenuating circumstances, it could.
Right. So to give you an example, I have a client that's used to making, almost $7,000 a month. And now they're on unemployment making $460 a week.
Oh my gosh.
So when you sit and quantify that, you go, okay, we have top down mortgage, health insurance, cars,
right.
credit cards, student loans, kids tuition, and there's no money. And what's $460 a week? And that's not even going to pay the power bill.
Well, it's not going to buy food.
So, with that said, that particular person has to dig into their savings and suck it up and pay their bills. And if they didn't have savings, then look for other alternatives or payment relief. But in that particular case, that person's probably going to have some financial ramifications from all of this, because the income has cut down dramatically. And without knowing when they're going back to work, this will kind of do a spiral for them.
Yeah. Now, do you foresee this changing anything with your industry at all?
Well, again, so currently someone on unemployment, again, if they're keeping their credit in order and they get back to work, they can start buying a home right away or refinance right away. At the moment, Fannie and Freddie guidelines, I've checked even with all of our servicers that someone currently on unemployment is not eligible to refinance or buy. So they're having to wait. Now the waiting periods, let's hope they're not 6 months, because then things start changing. So at the moment, it's not affecting our little world, but as this continues, we're not sure. I don't know if you've heard any direction of when this might be lifted, because it keeps getting pushed out. So I don't foresee
it keeps getting pushed out, and then we're having like epic battles between people who want to open and people who don't want to open. I think we're going to have a larger game plan in place before we even think about it.
Yeah. And, again, we're fortunate in the sense that Vegas has a booming economy, and I think that we're going to recover quite nicely. How quickly is the question.
Right. Yeah, I agree.
Yeah.
It's really, I think the part of it that people are worried about, and it's kind of hard to say too much about, is because they're looking at the recession, that happened the last time, but what I have been telling people, and you can, definitely correct me, if I'm wrong, is that, that recession revolved around the housing market.
It did.
This does not.
Correct.
So will it affect some, of our ability to buy or sell, or, will there be foreclosures? Will there be short sales? It remains to be seen, but we've still had short sales and foreclosures even now.
Right.
So, and we're way past the point that, we're in any type of recession. So, I think we will still see those being done. I don't believe that it's going to be like the previous recession, though.
No, and you're right. As I think that what happens is those that went through the recession, that were old enough and experienced it, that's the memory they have. It was catastrophic and it was horrible, which this is not the same. in the sense it's horrible because people are ill and people are dying
Yeah.
from the virus. But the recession is not related to housing, and so therefore we'll recover, and
Yeah.
it'll be short-lived. And again, statistically, what I've seen is that they had a chart that said over the last 5 recessions that we had, after the recession, property values actually increased.
Right.
So, in that front,
Yeah.
it's
So
a good thing.
fingers crossed.
I know. Well, again, there'll be, I mean, you have to expect it, unfortunately, with the number of people that have been infected in Vegas. That, I mean, we are unique with all the casinos, and they're still shut down, and the hundreds of thousands of people that are affected from that. But you
Right.
have to expect there'll be a slowdown, and there's going to be people that made bad choices, and there'll be short sales and foreclosures and credit issues, but I don't think it'll be on the scale we saw in 2008.
Yeah, I don't believe so either. You know, but we will wait and see. I mean, I think it depends on how long this lasts as well. But I know it seems like it took a lot for these like stimulus and all this to get done. But I mean, how do you handle a worldwide pandemic? I don't, I mean, I talk to like my in-laws and, just ask them, would you ever have expected, to see this in your lifetime?
Yeah.
And nobody could have, I'm sure people have predicted it, but how do you prepare, adequately for something like this? I don't think there is any preparation for this.
Yeah, I don't think so either. I mean, I know there's been comparisons to the Spanish flu and things that happened, but again, how do you prepare? I think that day by day, and that's hopefully is going forward. People are staying positive, and
Yeah.
we just tackle it and get stronger together.
Yeah. And all we can do is take it a day at a time.
Yeah, exactly.
All right.
Well,
Well, I don't have any other questions for you. Do you have any other questions?
no, I don't. And I just, it's good. I have to say is it's good to get the other side of the table's information and
Yeah,
know that
absolutely. Well,
and
and I always try to stay in my lane. I don't like giving information about anything to do with lending because your world changes so quickly that I could give them accurate information that was accurate 3 days ago that is now no longer accurate. So I really like to let whoever the professional is on that side of the table share their information. So I appreciate you being here with me today.
And same here. I know my clients appreciate the information from a local expert so that they can get reassurance that the sky is not falling.
Right. Yes, it is not falling. So,
Yeah.
well, thank you. And if this continues much longer, we'll have to get on here again.
Yeah, we'll have to do an update.
Give another update.
Yeah, absolutely.
All right. So I'm going to link all of our information. You can contact us, ask us questions, and we will definitely be glad to help. So
Absolutely.
we will see you the next time.
Yeah.
Bye.
Bye for now.